What is going on, investors? My name's Emmanuel, and this is why, ladies and gentlemen, we buy on red days. Because when we buy on red days and then we see green days like today, they taste all the more sweeter. Okay, green days taste all the more sweeter. So in this video, I'm going to take you through some of my latest acquisitions during the bearish couple of weeks that we've had. I'll just show you my top 3 positions that I purchased. But before we dive into that, I want to share this quote from Peter Lynch's Beating the Streets. He said, "Sometimes the best stocks to buy may be the ones that you already own." Okay, and that's going to be the premise for this video. A lot of the stocks that I purchased during the sell-off were pretty much stocks that I already own, because you know the business well, you know the true value of the business, and the fact that it was selling off quite significantly, I helped myself some more shares of stocks that I already own. So I'm going to take you through my top 3 positions, show you how many shares I own, whether I'm in profit or loss, and why I decided to pick up more shares. Now, before we dive into it, make sure you smash the like button, hit the subscribe button and the notification bell if you want to see more video content from me. Plus, if you want to stay up to date with all of my latest buys and sells, and also if you want to stay on top of my latest research, then you need to join my Discord group, and you can do that by clicking the Patreon link in the description below. So with that said, let's dive into it. So first up, we have Celsius Holding. Ticker symbol is CELH. And I remember I told you guys about this company when I had about 60 shares. Well, the price did sell off quite significantly, and now I'm sitting on 180 shares. Cost per share of $47.14, and right now the position is up 37%, and we're just over $3,000 in profit. And this is quite annoying because I only have 50% in play. So my original intention when I did all of my research was to invest £10,000. I wanted to put £10,000 into this company. And right now I have about £5,000 or £6,000 in play because the share price absolutely took off. And today was no exception. Today we are up 8.59%. Over the last 5 trading days, we are up 13%. And on the month, we are doing really well. We are up 52% on the month. It's absolutely crazy. This company has been doing incredible for my portfolio, and I'm very happy with my position. Now, why is this company doing really well? The main reason that I can find is because the analysts, the 4 analysts that are covering this company, imagine only 4 analysts are covering this company. So what do you think is going to happen when more analysts start to get wind of this company? It's going to go absolutely mental. But anyways, 4 analysts are currently covering this company. And prior, they estimated the sales growth of 30% plus for Celsius. However, they recently revised their figures, and they've now boosted Celsius sales growth to up to 52.80% by next year, 2022, which is absolutely phenomenal. And if you don't think these figures are impressive, let's compare it to its current peers in the market right now. So as of right now, the main 2 competitors for Celsius right now is Monster Energy and also Red Bull. Now, Red Bull isn't publicly traded, but Monster Energy is, okay? And I've selected Fizzy Get Dizzy. That's one of Jeremy's favorites. And you have Coke, okay? That's a cyclical, not really a growth company, but it puts it into perspective. Now, if you look at revenue year-over-year growth for Celsius, we absolutely smoked Monster Energy. It's not even close. Our year-on-year revenue growth is currently 73.96% compared to Monsters, which is 9.4%, and Fizzy Get Dizzy is 9.7%, and you had Coke 3.75%, okay? The 3-year revenue compounded annual growth rate is currently 53.47%. That's just mind-blowing, okay? Monsters is 10.93, which isn't too bad. Monsters still quite impressive. But Fizzy Get Dizzy and Coke, you can see that they're lagging here at 4% and 5% respectively. Now, let's take a look at the 5% CAGR, guys. This is unbelievable. 49.99% over the 5-year CAGR period. Monster as well, 11.05. And Fizzy Get Dizzy is not doing too bad at 9.23%. And Coke is at 16.77%. Now, let's take a look at their balance sheet, okay? Because it's all good looking at revenue. You're like, okay, great top line. How is their balance sheet? Because the balance sheet for me is the most important part. Balance sheet is equally impressive. We have total cash of 43.25 million, and our total debt, 1 million. So we pretty much have no debt, which if you look at the other competitors as well, apart from Coke, they also have relatively strong cash positions. Monsters is very impressive. They have 2 billion in cash. and only 21 million in total debt. And we have an incredibly impressive 3.53 current ratio, but Monster is exceeding ours at 4.19. But again, Monster is a massive company. Fizzy Get Dizzy is at 2.4 and Coke is only at 1.32. So we have an incredible balance sheet. The company is growing exponentially. But one of the main reasons why I am even more bullish on this company, and I still think we have a lot of growth ahead of us, simply because of what management said during the Q4 earnings call. Now, I did a breakdown for my Discord. I made a bullet point of all of the key points from the earnings call. But this for me is what stands out. Okay, so if you take a look at it, the health and fitness, vending, and food services were hit the hardest during the Cerrone restrictions and significantly impacted the top line. Okay. However, this presents an exciting opportunity because as restrictions are lifted, we will see significant, although slightly skewed, revenue growth from a year-over-year perspective, which could see would-be investors very, very excited. And like I said, we only have 4 analysts covering this company right now. And if we deliver on the type of figures that they are expecting, this is going to draw a lot more attention to this company. Now, like I mentioned, revenue was affected by the health and fitness side of the business pretty much being on pause. But over the weekend, this company had their own booth, their own Celsius booth at the world-renowned FitCon conference. And I said to my Discord members that I love this company. They're really pushing hard to revive the fitness revenue stream that was impacted by Cerrone last year. We had a booth at FitCon. Now, this is one of the largest fitness conferences in the world. And the fact that we had a booth allowing fitness enthusiasts, potentially gym chain owners, to try our products. And if they like it, then of course, this is going to boost revenue and this is going to revive the fitness side of the revenue stream of our business. And I am absolutely excited about 2021 and 2022, especially if we can keep up with that growth rate. So with that said, I'm extremely happy with my position in Celsius Holdings. And I'm currently getting serious FOMO vibes. I'm thinking to maybe bump this up to maybe 200 shares or maybe average up a little bit. We are up 52% on the month. So if we can see a 10% pullback, I would love that. And I'll just top up my position and maybe average up. As long as I can keep my average below 50, I think that will be very good in the long run because our market cap right now is still only 4 billion, guys. Our market cap is still sub $5 billion. And I think when you compare it to Monster, Monster has a market cap of 51 billion. Okay. Monster's 51 billion. Celsius is less than 5 billion. They're in the same industry. And another point on that, which I shared with my Discord members, when you look at their e-commerce performance over the previous quarter, the e-commerce sales growth on Amazon alone was up 177% as of February 13th, 2021. And the next highest competitor was Red Bull, which grew only 14.8% on the same platform within the same period. Okay. Overall, Celsius is now the 3rd largest brand on Amazon. So that's the energy drinking brand. And they're only behind Monster Energy and Red Bull within the energy drink category. The fact that we are already in 3rd position behind Monster and Red Bull, and we have a market cap of sub 5 billion. I think, man, I do see this 2xing, 3xing very, very soon. So Celsius is definitely a company you want on your watch list. Now, the next 2 companies that I'm going to bring to your attention, I've already done multiple videos on them. I'm not going to spend too long on them. My next main purchase over the last couple of weeks has been Tattooed Chef, okay? Tattooed Chef needs no introduction on this channel. If you are a subscriber of mine, you know I'm incredibly bullish on Tattooed Chef. It's one of my favorite holdings in my portfolio. But yeah, Tattooed Chef right now is still currently down 36% over its recent highs. For me, Tattooed Chef is always a buy sub $20. And I still think the company is very undervalued as we speak. Now, in case you haven't seen any of my recent videos regarding Tattooed Chef, their share price tanked to about $15 due to the CFO leaving, even though we got immediate replacement, and due to the CEO selling a small percentage of his shares. And that was to fulfill prior obligations. But nevertheless, the share price still tanked, and I helped myself to more shares. So currently, I'm sitting on shy of 2,500 shares of Tattooed Chef. My cost basis, I'm really happy with my cost basis. I managed to get it down to $19.19. Ideally, I would like to get this position sub $19. So I might end up building this position to 3,000 shares and then I will be completely done with Tattooed Chef. But as you can see, it weighs a significant amount of my portfolio at 28.2%. So I'm going to try and be cautious. I don't want it to get to 30%. So it's a bit challenging right now. And right now my position is down $3,000. But again, selling. I don't care. This is a long-term hold for me. I'm completely bullish on the company. As long as the company continues on its current trajectory, I have no reason to sell. I am bullish long-term. Now, last up is Palantir. Ticker symbol is PLTR. Again, another stock that is no stranger to my channel. Currently, my cost basis is $24.19. I did help myself to a couple of more shares with Palantir, and right now I'm sitting on 1,315. My position is still in the red. I'm down 0.4% at $118. And it weighs about 20% of my portfolio. If there's one thing I learned from reading Christopher Myers' 100 Baggers, he said, bet big on your best ideas. And that's exactly what I'm doing with Tattooed Chef, with Palantir, with GoPro, with BlackBerry, with Celsius, with APXT, and many, many more companies, okay? So bet big on your best ideas. And that's exactly what I did with Palantir. So those are my current positions. I think I'll leave it on that. Bet big on your best ideas. Comment below if you went shopping recently and let me know what stocks you picked up and how many and what your average price is. But if you gained any value from today's video, please make sure you smash the like button, hit the subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching, and I'll catch you in the next one. Peace.